Artificial intelligence has the world in a tight grip. 5 to 10 years ago, people had no idea that there would be artificial intelligence or chatbots that could potentially take their means of earning or even help them with it. Now everyone knows about it. Everyone uses it for anything and everything, even finance. AI's done some fantastic work for finance, but the question is that too good to be true? It's extraordinary, but I don't know if it's beneficial. One of the esteemed and well-known finance gurus, Warren Buffett, has revealed his thoughts on AI being used in finance and how it's impacting it, and let's just say he may not be the biggest fan. He recalls the time of the biggest and most amazing things created by humans in history, including the atomic bomb. Something amazing doesn't always mean it will change the world amazingly. His words can't help but point us in the direction of Geoffrey Hinton, the godfather of AI, quitting because he's now afraid of his creation. Is it that powerful? And if it is it beneficial or harmful? Or does it perfectly balance both aspects? Although AI has been doing extraordinary upgrades in the financial industry like never before, an industry where the use of AI almost seemed obsolete at a point, let's see what advantages have been sourced through AI in finance. Number 1. Algorithm trading. Gone are the times when stockbrokers used to figure out if it was the right time to sell or buy the stocks. Machine learning and artificial intelligence have cracked algorithm trading. Imagine a digital brain that understands and analyzes all the information about the stocks in seconds to minutes. It understands the pattern of potential profits and figures out when it will be the most advantageous to make a move. Isn't that exciting? A digital program aggregated with enough information and knowledge that it can surpass the human brain in its speed and efficiency in understanding these mathematical patterns, which is of great essence in the fast-paced world of finance. Number 2. Risk management. In finance, where loans are the lifeblood of economic progress, a risk management facility wouldn't be the worst thing, right? AI has again come to the rescue of financial services from the unwavering waves. Imagine if every bank knew whether the person getting the loan would return it. AI taps into the smallest details and generates answers based on debt levels, income, and other aspects such as payment patterns and credit history to determine if the person is eligible for a loan. This has been made possible through continuous learning, the ability to predict, data gathering, and the automatic decision-making process. All these processes envelop the new success toward a lucrative future, leaving behind the traditional prediction models. It manages risks in a bank setting, helps predict the upcoming losses in stocks, and helps you avoid them by making the right decision at the right time. Number 3. Fraud detection. When you put your hard-earned money into a bank to keep it safe, you trust it'll stay safe. Now imagine a watchful guard on your money, figuring out all the exit routes and things that could go wrong, and thinking of 100 ways to keep it safe. AI is acting as that guard for your money. Let's say you're at your home and get a text of a transaction being made right now. AI, being a fraud detector, will understand your patterns, figure out geological location, and the real-time analysis of any previous patterns that recognize this transaction to figure out if it's you or not. Safe to say you've got a new super security guard for your money at your beck and call at all times. Number 4. Robo-advisor. Imagine having a robot friend who's also a financial expert. That's a robo-advisor. It starts by asking questions to understand your money goals and how comfortable you are with risks. Then this robot looks at what's happening in the money world and creates a plan just for you, like a custom-made suit. Instead of picking stocks, it does that for you, creating a mix of investments called your portfolio. The coolest part? It monitors your money 24/7, making small changes when needed. It's like having a clever friend who helps you invest without the confusing jargon. And the best part is, it won't let emotions get in the way, just logic and data. Easy, right? Number 5. Advanced credit scoring. Imagine an AI-powered financial detective that's way cooler than the usual credit score checker. This savvy investigator goes beyond just peeking at your credit card history. It checks how you handle things like paying rent and using your phone. It's like having a digital bloodhound creating a full picture of your money habits. This detective gives you a responsibility score instead of the usual credit score, showing lenders how reliable you are in a more detailed way. It's like having a personal financial investigator who doesn't just look at your past, but predicts how well you'll handle money in the future, all while keeping an eye on your evolving financial story. It's like getting credit for being responsible even before you borrow. Number 6. Chatbots as customer service. Imagine a super smart friend who's like your assistant for all things money. That's what AI-powered chatbots do in customer service. These computer wizards use natural language processing, meaning they can understand your words like chatting with a friend. It's always available and lightning fast. It handles questions about your account balance, recent transactions, how to transfer money, or even general questions about financial products. They're constant learners. The more people talk to them, the smarter they get. It's like having a helpful guide in the digital world of finance, ready to assist you wherever you are and whenever you like to chat. No doubt that artificial intelligence is indeed changing the course of finance, but it does contain its dangers as well. At the end of the day, it's not the wisdom of the human mind, but the aggregated knowledge that's been transferred and fed into the software. It's literally in the word. It's called artificial intelligence for a reason. It cannot come to the point of human wisdom. It can make mistakes as well, whether it be in stock trading, algorithm or pattern understanding, or risk management. There's no guarantee that there will never be any risks with AI. When asked about robo-advisors, Dave Ramsey, a personal finance expert, shared his views on taking advice from it on small amounts of money but never a huge stack. Because if you lose your money, in the end, it's your own money and it will be your fault that you lost it. A robo-advisor will be able to advise you, but taking the action of investing will be yours. He also believes that AI could become a more efficient way to commit fraud in all aspects of life, not only finance. With AI's efficiency and some humans' creativity in committing crimes, this combination could prove catastrophic. Even though machine learning has significantly helped people in the world in every field, it also comes with its cons. It's being said that AI will eliminate jobs that seem somewhat complex and will eradicate 40% of the world's jobs, simply leaving humans unemployed and out of a living. Even President Joe Biden has talked about the significance of AI by addressing its potential benefits and risks. During discussions on AI, he emphasized the need to approach its integration cautiously, recognizing its challenges and potential advantages. Apparently, AI has its Bill of Rights, essentially an AI Bill of Rights, to protect people from the potential harms and dangers associated with AI. The set of rights aims to ensure that AI is utilized as a beneficial tool, promoting its positive impacts while mitigating risks. You know it's become a big deal when even the president's talking about it, right? What do you think about the use of AI in finance? Are you all for it or do you not care for it? Tell us in the comments below, and don't forget to like and subscribe. Imagine a future in which digital assets completely transform entire industries and your smartphone serves as your bank. Today, we'll explore the implications of Bitcoin's ETF and the future of cryptocurrency as a whole in the year 2024. The rebirth that raced over the crypto asset class in 2023 was more than welcome. Following a harsh crypto winter in 2023, 2024 is looking like it will go down in history, with indications that a bull market may be on the horizon. Number 1. Bitcoin will trade over $80,000, reaching a new all-time high. In 2023, Bitcoin surpassed all major asset classes, rising 128%, while the S&P 500 returned 21%. Gold returned 12%, and bonds returned 2%. With Bitcoin, Jack Dorsey anticipates the trend to continue in 2024, trading over $80,000 and reaching a new peak. After the approval of Spot Bitcoin ETF, it's predicted to bring in a flood of fresh institutional and retail investor funds, driving up demand for Bitcoin. After the second Bitcoin halving in April or May of 2024, the amount of new Bitcoin that's produced each year will be halved. That translates to a $6.2 billion decrease in the amount of new Bitcoin that enters the market annually at present pricing, and all of it perfectly fits into the equation of more demand and less supply. 2. Approval of Spot Bitcoin ETFs. In a recent development, the debut of spot Bitcoin ETFs has proven to be a remarkable success. On January 10, 2024, the U.S. Securities and Exchange Commission, or SEC, approved 11 spot Bitcoin ETFs, and the investors' response was massive. The amount of Bitcoin purchased by spot Bitcoin ETFs in just 7 trading days accounts for 53% of the total Bitcoin amassed by the mega investor MicroStrategy over the last 3 years. According to publicly available data, BlackRock's IBIT and Fidelity's FBTC have become the largest Bitcoin buyers among spot BTC ETFs since the trading began, collecting 37,304 and 29,232 BTC respectively. The Bitwise Bitcoin ETF and the ARK 21 Shares Bitcoin ETF are next, with 16,451 BTC and 10,630 BTC respectively. After that, the SEC should decide on approval of spot Ethereum ETF applications by May 23, 2024. In a recent interview, Cathie Wood predicted a substantial growth of the entire crypto asset class from $1 trillion today to $25 trillion over the next 5 to 7 years.
Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030.
Indeed, in the days after the SEC's approval, over $2 billion flowed into Bitcoin ETFs. But Bitcoin prices themselves sunk. Immediately afterward, crypto shot up by about $3,000 to a price of $48,600. Since then, it's dropped down to $41,000, its lowest price since early December. But analysts are hopeful that the prices will bounce back by February 2024. According to BlackRock CEO Larry Fink, ETFs are the future of revolution.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us to move forward.
3. Coinbase will surpass Wall Street by at least 10 times. Wall Street presumes Coinbase's revenue to increase from $2.8 billion to $3.1 billion, a 9% annual growth. That is far too traditional. However, trends predict that they will at least double. These two items are what Wall Street is lacking. First, the bull market. The previous year, Bitcoin has risen 128%. It can be anticipated that Coinbase's trade volumes will rise as they have in the past during bull markets. The innovation comes in second. A new Layer 2 blockchain, Base, perpetual futures, US-regulated futures contracts, on-chain identities, and other products have all been introduced by Coinbase and are all gaining significant interest. 4. Stablecoins over Visa. One of the killer apps of cryptocurrency is stablecoins.
You'll see Amazon and Google and Microsoft using stablecoin for international remittance and corporate remittance. And then you'll see it get built into Apple Pay and Google Pay and Amazon as payment method, right? And then you will actually see billions of people using this stuff.
Which have grown from practically nothing to a $137 billion industry over the last 4 years. It can be predicted that 2024 will be another significant year of growth since the cryptocurrency bull market is back and because the use of stablecoins for payments and remittances is growing quickly. How important is it? Stablecoins are expected to settle at a higher volume than Visa. Although it may sound absurd, they are closer than you might imagine. 5. On-chain launching and tokenizing of funds by JP Morgan. Real assets, stock, real estate, commodities, and more, worth more than $5.5 billion have been tokenized within blockchain systems. According to projections by the Global Financial Markets Association, or GFMA, that amount will increase to $16 trillion by 2030.
JP Morgan and BlackRock teamed up for the next chapter. Now, the biggest bank in the world has the capability to convert bank deposits into digital assets. About a month ago, I shared the news here that Citibank launched its digital token, which enables the bank to convert its customer assets, commercial accounts only as of the launch day, into digital tokens.
Years of research into blockchain technology have led JP Morgan and their team to test tokenized portfolios on the Avalanche blockchain. They were able to automate several of the phases in the portfolio management process, such as rebalancing, subscriptions, and redemptions. JP Morgan might enter a rapidly expanding sector and capitalize on the savings that on-chain assets can provide by launching a tokenized fund in 2024. 6. More people will turn to cryptocurrency applications. Fast Ethereum growth. Blockchains like Ethereum indeed produce cash flow, but Bitcoin doesn't in the conventional sense. Ethereum serves as a worldwide supercomputer, supporting hundreds of daily cryptocurrency applications. Additionally, you must utilize Ethereum cryptocurrency to pay a fee to use those programs. As cryptocurrency apps become more widely used, it can be predicted that it will at least quadruple by 2024, making Ethereum one of the largest and fastest-growing tech platforms globally. 7. Taylor Swift. NFTs will be a new, innovative way to connect with fans. The most well-known musician in the world, Taylor Swift, is known for her inventiveness and her ability to connect with her audience especially. NFTs are a wonderful fit with those values and reputations. Through exclusive access to events, new music, and concerts, as well as the opportunity to get royalties, they can give musicians a new platform for communicating with their fans. NFTs have already been used in one form or another by well-known bands and performers, including Kings of Leon, The Chainsmokers, Eminem, and Snoop Dogg. With over 26 billion listeners in 2023, Swift was the most streamed artist on Spotify. The platform is experimenting with token-gated playlists, which require users to own a specific NFT to access the music. 8. Crypto will be the native money of the internet. In 2024, it can be presumed that AI assistants will begin making online payments with cryptocurrency, confirming its status as the native money of the internet. A defining trend of 2024 and beyond is likely to be the advent of semi-autonomous AI agents, digital assistants that you may instruct to perform certain tasks. However, the capabilities of AI agents will be restricted if they cannot conduct transactions in the real world with ease. That's where cryptocurrency will play its part. It can be predicted that digital currencies like Bitcoin or stablecoins will be preferred by AI agents. 9. Prediction market will emerge as the new killer app. Prediction markets, which are expected to become the next big thing in cryptocurrency, will have more than $100 million invested in them. Would you like to place a bet about elections? Indeed, you can by using decentralized prediction markets. These markets are elevated by cryptocurrency, which makes them permissionless and borderless and automates processes like payouts and winner identification. Decentralized prediction markets will become the next big thing in cryptocurrency, taking the lead in both event-based and conventional sports wagering. 10. Dropping of average transaction cost. The average transaction cost on the Ethereum blockchain will drop to less than 1 cent thanks to a significant improvement opening the door for more widespread applications. EIP 4844's main objective is to assist in lowering Ethereum's average transaction cost. For low-cost Layer 2 blockchains, the average charge per transaction is currently about 14 cents. This upgrade may cause that to drop below 1 cent. The kinds of activities that people can realistically engage in on the network will significantly expand with a 90% plus reduction in the cost of using Ethereum. 11. The perk prediction. Financial advisors will opt for crypto. By the end of 2024, 1 in 4 financial advisors will have cryptocurrency allocated to customer accounts. Currently, a startlingly small percentage of financial advisors place cryptocurrency in their clients' accounts. Perhaps this is due to their lack of faith in cryptocurrencies as an asset class. However, if the resurgence of cryptocurrency in 2022 taught us anything, it's that it's here to stay. SEC regulation for crypto exchanges. SEC has had a pretty active year with lawsuits against Coinbase, Kraken, and Binance over the past 12 months. In response to widespread fraud, claims, and bankruptcies in the crypto industry, the SEC took extensive enforcement actions in 2023, collectively initiating over 200 cases. The day before spot ETF approval, Gensler also issued a warning on social media about crypto investing. The overall impact of SEC enforcement actions on crypto prices is still unclear, but some analysts argue that in the future, SEC enforcement actions can help legitimize and secure the cryptocurrency industry by bringing it under the same regulatory framework as traditional financial markets. Excited about the future of cryptocurrencies? Share your 2024 predictions in the comments section below. Like, subscribe, and all that jazz.